Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, XRT's shares outstanding have dropped down back to historic lows. We're going to be talking about what the implications are for this historically when we've seen something like this, and what the correlation is between this historically, between these low shares outstanding for XRT and price action in GameStop. So all of that is coming up today, as well as a dive into our typical analytics. Before we get started, thanks go out once again to GME Sure Why Not, aka Feckit Be Grand, for sponsoring today's video and newsletter, as well as to Dat Screfto, Ken Wedberlin, and Not Medical Advice for continuing to support my research and publication efforts here on a monthly basis by offsetting some of my data expenses. Thanks to everyone who has supported in the past and will support in the future. Looking forward, to hearing from many of you as always. So thank you very much. Right, even a comment, even a like, even a share, anything like that, right? Definitely helps inspire and motivate. So I appreciate certainly everyone who's supported the channel thus far. So today's main topic here, what I think is the biggest kernel to take away from here, is we may be looking at some dynamic price movement to the upside based on what we've seen here in XRT. What is operative here, right? We've only seen XRT shares outstanding. Okay, so get down to these types of low levels, right? So they've gotten down to about 2.35 million shares. We saw this actually just back on April 4th. Prior to these two dates, in the past 6 years, so basically, I don't know what you would call this, the modern GameStop era, the recent GameStop era, so the period leading up to the sneeze, and then everything since. We've only seen this happen 5 times. So from all of 2019, 20, 21, 22, 23, 24, 25, right? So I guess that's 6 years. Yeah. We haven't seen anything like this. We haven't seen anything like this. We have only seen something like this 5 times in that 6-year period. And what we have not seen is we've never seen something like this occur more than once in the same year. That's number one, but certainly never more than once in the same month. So this is a very rare occurrence. So we're going to be breaking down, what that means today. I have this pointed out, right? You can see how far spaced these are apart, right? So once in 2020, once in 21, once in 22, nothing in 23, nothing in 24, and then boom, right just a few weeks ago, and again just now. So what did that look like? Let's start there, and then we'll work to our contextual factors and see if we can't think a little bit about what this may mean for our price action going forward. So right, 2.35 million. That's our magic number there. Certainly, you can go back, right? How did I get this idea? How did I get this data? Certainly, big thanks go out. Much credit goes out to Richard Newton for putting together his ETF spreadsheet, where he has shares outstanding of XRT and a number of ETFs, historic data, all the way going back to 2019. So he's really done a wonderful job making all of that available, not only compiling all of that, but making it accessible and available for free to all of us. So huge thanks go out to Richard for that. So really interesting to see that pop up. You'll remember, just about 3 weeks ago, a little over, almost 4 now, I should say. We talked about this occurring on April 4th. Pointed out that this had really only happened a few tihas. What does this mean? Why do shares get this low? Why is that something to be interested in? Well, of course, right, XRT has largely been used. It is this is certainly Richard's hypothesis. It does seem to be the case based on what we've seen in terms of how largely we get swings in the XRT number of shares outstanding. We don't see that. So if you go and take a look at Richard's data, right, we have some of these bigger ETFs that do contain GameStop. They do not swing in the same way that XRT does. We have, right, we'll see what we've seen basically throughout April is we saw shares outstanding get down to 2.35 million. We saw them in the course of a week shoot all the way back up to 9.7. So this is, right, so this is 4 times. So a 300% increase in the shares outstanding. And now, 2 weeks after that, we've seen that all of those shares that were created, now they've completely collapsed. They've all been redeemed for shares of the underlying. So, right, the idea with an ETF is, why would you go ahead and create a share of an ETF? Well, you'd say, well, okay, somebody comes to an institution and says, hello, I would like to purchase a share. I would like my money invested in this particular fund. And what does this do? Okay, you have this fund, you can trade shares of it, but this fund allows individuals, right, to invest in these different packages of securities, right? They can use this for diversification. They can use this to specialize in individual sectors. So, right, this is ETFs have become very popular, right? SPY, QQQ. These are big ETFs that are weighted to look like the S&P 500. So what's going on here? Okay, so why is this something that we should be looking at or thinking about with respect to GameStop? Well, okay, right. A trader can come to an investor, an investor can come to an institution and say, yeah, I'd like to invest in this fund. So the money then goes to the broker. The broker says, hello, goes to an authorized participant, says to the authorized participant, okay, I have an order, right, to create this many shares of the ETF, right? So say a certain amount of money comes in, there aren't shares available. The institution can go to the authorized participant and ask that shares of the ETF be created. So what will happen is, such as not to disrupt the value of that ETF on the open market, the individual, right? So the authorized participant will go and then take the money that's given to the institution, that the institution is giving to the authorized participant, and build shares of the underlying in order to meet this particular buy demand, right? So this is called a creation order. What they'll do is they will hold on their books, the fund will hold on their books shares that represent the composition of the ETF, and then they will give shares of the ETF to the institution that requested that those shares be made. And then, if the institution had, say, a retail investor or something request shares or purchase shares of that, then the institution has the ETF shares in their books, say, in the name of their particular client who requested to have shares of this particular fund. So, okay, what institutions, however, can do is initiate a redemption order. So they can send in a redemption order to the authorized participant. They can give back, right? So they can hand over the share of the ETF, and then the authorized participant can come and deliver the underlying securities to the institution that requested that the share be created in the first place, the institution that's putting in the redemption order. Okay, so when this occurs, the institution receives underlying securities if it's cash. However, the authorized participant does not necessarily need to immediately hand over real shares of the underlying, right? They are permitted by the DTCC rulebook to hand over cash in lieu of securities. So they do not actually have to go out immediately and purchase shares of the underlying. They can put an IOU share, which is actually just marked with cash, into the share of the underlying ETF. Then let's say a redemption order comes in. Let's say that institution has not yet gone ahead and acquired the underlying security to replace the cash. That institution goes ahead and hands over a share of the underlying security, which was put into the ETF in the first place with cash. But now the institution that requested the redemption order can now use these in order to meet failed to deliver obligations, say, on other ETFs, and they can play this whole musical chair charade. Okay, why do the number of shares outstanding matter? Well, it seems to be that shares outstanding of XRT only get below a certain number, right? Maybe there's a number of shares that get created, right? We've seen them come through in large blocks. In fact, around 4/4, when we saw shares outstanding get down to 2.3 million, we saw a large creation order come in on XRT of 1 million units, right? We saw this come in. I don't recall whether it was dark pooled or it went to the lit market. But what seems to be suggested here is, right, institutions are actively using XRT in order to cover fails, either on different ETFs or to make sure that they are not incurring fails to deliver on GameStop. What we see is large creation orders come in, which suggest that there's maybe this overhead on the shares outstanding that institutions themselves are putting in creation and redemption orders for, that do not track, say, to client requests for the creation of of these particular shares. So they're using this creation and redemption process in XRT in order to redeem shares of the GameStop underlying in order to meet FTD requirements across the rest of the ETF market or on their particular securities, right? So in doing so, right, they can avoid disrupting the price of GameStop in a way that, say, would be disfavorable to their options bets or something like this, or not favorable in terms of their short positions otherwise. Okay. So what seems to be about the magic number here for XRT is, right, we've only seen it, the only lower instance that I've seen is it's gotten down, 2 million is the floor, right? I have not seen, going through all of Richard's data, I've not seen, certainly in the past 6 years, there is not a single instance where shares outstanding have dipped below 2 million. 2.35 million, we haven't seen an instance, certainly not in the past 3 years, where it has dipped below 2.35 million. So very recently, 2.35 million has served as a floor. And in fact, 2.35 million we saw back on 4/4. It turns out, right, as well, we had a very large number of XRT fails immediately before this happened. We had over 1 million fails were incurred on XRT on the 3rd of April. And not all of them, certainly not all of them were cleared by the 4th of April. So we saw shares outstanding get very, very low. Yeah, so I thought, okay, well, what's going on here, right? What does this necessarily have something to do with GameStop? What happens when we see shares available to borrow get this low, right? Because usually we'll see them get this low, and then immediately they'll start working their way back up. So that's what we saw earlier in April of this year, for example. We saw it get down to 2.35, and then within a few days, within basically 1 week, we saw shares outstanding get up to 9.7 million, which is a recent high. We haven't seen an instance of shares outstanding being higher than that, certainly in the past at least 3 years, but probably closer to, I think, 3 years. 2022, I think we saw some instances where it was higher, but XRT in general, I think in 2022 was higher. So what did our price action actually look like? Actually, I put this as a thread over on my X page. You can go take a look here. But we have some snippets. Okay, so right here's our instances once again. This is what we did back on 2/25/20. So this is the first time in the past 6 years that we saw something like this happen. So we actually, right, we traded down. This was in February, end of February of 2020. And then following, we got basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, basically about 2 weeks, slightly more than 2 weeks of green. We got some big green. So we had a green day on the day that it occurred. And then several days following, for at least 2 weeks, we had a pretty big bullish uptrend basically into the period a couple weeks before March earnings. Right. And then earnings actually went up and they were higher in 2020. But yeah, so we got a pretty big two week move there in GameStop. So let's see. I think that went from like, well, it was pretty low, but it appreciated quite considerably, as we can see. Okay. Next instance here was 2021. Well, the last time this happened, right, the next time this happened in 2021, this was the top of the sneeze. All right, so this did not result in that trend, but this is, of course, amid some considerable additional turmoil in the underlying stock. Right, this is when they shut off the buy button. So I think the 28th, 29th is when they shut off the buy button. So an additional component here, maybe it was the 30th, I think just after this. So that's very interesting. Okay, considering that XRT had basically been tapped out as a vehicle for containing GameStop's price action at this time. Perhaps that gives us some signals. That's an additional dimension to understanding the motivations for why such attempts, such really game-breaking attempts to control the price action were executed. Very interesting. In 2022, so this is the 7th of February, right? This red candle right here is the 7th of February, 2022. And this also went on a, let's see, 1, 2, 3, 4, 5, 6, 7. This was about a week and a half. You could maybe throw in this one here. So about a week and a half. It stayed elevated for a little bit, but it was certainly a pretty decent bull run, despite the fact that we were in a pretty macro bear trend over in GameStop. So that was up until this year, that was the last time that this occurred, right? So shares got down to 2.35 million here on the 7th of February 2022. So interesting that two of these occurred in February. Interesting that one of them occurred right at the end of January. So seeing this happen in April is interesting, since we haven't seen this happen basically out of that kind of winter season. Didn't happen at all in 2023. Didn't happen at all in 2024. So here, this was the very bottom, 4.4. This was the very bottom of our shorting off of the convertible bond offering. This is it, right? This is as low as we got, essentially. Let's say the double bottom candle day. And yeah, just after this, right? So this was a Friday. We exploded up. We had a really big up day. And we basically traded up off of this into this sideways period here. So again, this is now the third time in the past 4 instances where we've seen this. We've seen 1 to 2 weeks, week and a half, I should say, to 2 weeks of bullish divergence, and not slight, and not even just like a day, but pretty steadily to the upside. So this is, 30, 40%, something like this. This right now in our current trend, I think, is about, this is off of 20. So from bottom to top, yeah, something like 40%. Yeah, something like 40% here. So what do we look at just yesterday? Here it is. Decent sized green candle on the daily, IV slightly up. We just saw this again now. Do we see this start moving to the upside? I mean, you'll recall back in basically right, my technical discussions that, hey, as long as we're holding support in this area, we're holding the 54-hour moving average, we're holding the 100-day moving average, which we did respect to the penny yesterday. Do we finally get this move? Right? Do we finally get, right? We mounted the 100-day here. We didn't really correct down here at all, which was very interesting to see. That, as I had sketched back on the 10th, right? So this is around the 10th. So we did get this little correction here. We got kind of one candle, but that's sort of it. And then we moved up beyond this. Yeah, we got our crosses here. Do we finally start to see this, like over on the weekly? Do we now move back into, start or I should say, continue our move to the upside on the heels of this XRT event? It is certainly possible. What is it, though? What is it that actually causes this movement to occur? And what I would suggest why this has something to do with a move to the upside is not so much that redemption effect, right? Redemption creates synthetic liquidity. Synthetic liquidity typically corresponds to prices down in GameStop. And we have seen some shares, we've seen liquidity get filled up. IV has gotten really low. 2 days ago, so during Monday's trading, we saw close to 1 million shares come off the shelf to contain GameStop's price, about 800,000. So they were used, but GameStop's price amid this has remained pretty resilient. Despite this, we've seen XRT shares outstanding now get down to 2.35 million. So it seems as though there is basically a limit to how much XRT can be redeemed without essentially completely deconstituting the fund, right? So at some point, creation orders have to come in so that the fund can replenish, so that more synthetic liquidity can be created. Now, why all of a sudden have we started to see this happen after the convertible bond offering? Well, as you recall with our discussions, and a number of others have been great about discussing this, as a result of the convertible bond offering, a very significant amount of GME short liquidity was deployed by a completely new set of traders, institutional traders. So with the convertible bond offering, if we bump out to our technicals here, right? Why did we get this huge drop off from earnings, right? We were trading up at 29.50. Why did we drop from 29.50 all the way down to essentially almost $20, right? Back to like 20.80 something. Why did we move this far down? Well, a part of this has to do with the convertible bond offering. A lot of these bonds, these convertible bonds, it's been highly suspected, were purchased by convertible bond arbitrageurs. So these are institutional traders at bond desks, at say proprietary trading firms, investment banks, major financial institutions, who want to take advantage of GameStop's volatility. And one of the major ways that they do this is by allowing themselves to be exposed to the gamma values in the convertible bond, which works like a call option. So what they do, right, is so they'll enter the bond long. This is how the trade was basically laid out. Mark Meldrins did a really excellent job explaining this. Right, so these arbitrageurs entered the trade by purchasing the convertible bond. So they're long the bond as a call option, essentially, on GameStop. Then they are short the underlying stock so that they are only exposed to the rate of change in delta of the convertible bond. So in doing so, they are able to essentially trade the bond, to arbitrage the bond. So as the bond, if we hop over, right, you can even view this. If we head over to TradingView has the bond. And look at this, right? We can even get a little closer look here. So this is pretty cool, right? So if you are an arbitrageur, right, if you are long this bond and short the underlying stock, you are only exposed to the appreciation of the underlying bond. So the face value of the bond, you're neutral on, okay? You are unexposed to whatever is going on there. So you are then able to swap this bond basically back and forth, I suppose, in order to profit off of the rate of change of the delta in these bonds. Okay, so what did that mean by and large for GameStop? Well, it meant that these bond traders, in order to become hedged on this bond trade, needed to enter a massive amount of short positions, right? In order to hedge these bonds, I think it was right. The company raised 1.5 billion, so that corresponds to let's see, it was $1,000 per note, which corresponded to about like 33 and a half shares. So 1.5 billion, 150 million, 50 million, 1.5 million times, let's see, that would then be, let's go 33.5. Yeah, so about 50 million shares. I mean, that's if they're 100% hedged against the share count of the bonds. Then that comes to about 50 million shares. So what did this do? This put GME into a massive short liquidity crunch, because now you have all of these institutions competing with the legacy shorts for access to shares of GameStop, to GameStop lending liquidity. All right, well, this now puts a strain. We already knew that there was a strain on GameStop lending liquidity independent of what was actually available from the company. This was the reason for the whole ETF musical chairs shenanigans, right? It was necessary for institutions to play this ETF game in order to have sufficient access to lending liquidity to adjust the price in the way that they wanted to. With the entry of the convertible bond arbitrageurs, that liquidity is now under stress. And in fact, 50 million shares of demand on the part of these new bond arbitrageurs. I mean, the GameStop float right now is, or I should say shares outstanding, is only like, well, until the bonds are actually there. Like, that's the thing about the bonds. They're not shares. You can't borrow the bond and deliver the bond in lieu of shares. So that's very interesting, right? So something like, I think 426 million shares outstanding. I think it's something like that. No, it's 446. It's 446 million shares outstanding. And then it's around 50 million shares of bonds. That's right. It's around 50 million shares of bonds. But you can't borrow the bonds, right? So this was actually a genius play from Cohen, insofar as he was able to raise money for the company without creating new lending liquidity. The bond cannot be used to satisfy fails to deliver on GameStop or on any of the ETFs which contain it. So he was able to raise money for the company. He was able to then not create any new liquidity, and he was able to bring in 50 million shares worth of demand for existing short lending liquidity to put pressure on legacy shorts. This was a genius move. And so what we see happening now is GameStop's lending liquidity is in a crunch. Now, we don't see that on the official numbers for shares itself. It doesn't ostensibly look like that when we go over and we look at the lending liquidity numbers. They are slightly lower than they were last week, right? 800,000 shares came off the shelf. And we do see pre-market here. They're trading, there's around 3.5 million still available. But the cracks, right? The cracks are showing up in XRT, which cannot stay stable. It is incurring millions of fails. If we go and look at the fail data, right, we can see that heading up to the middle of, right, we can see heading up to the middle of April here. Look at what it looked like towards the end of March. So here was XRT. All of this is going into earnings. Hundreds of thousands of fails. The day after, 2 days after earnings, XRT logs 878,000 fails, can't clear them by the 31st. There are still 542,000 fails, still 100,000 on April 1st. This is when the bond offering was completed. And then 2 days later, we get 1.1 million fails again. Can't clear them by the 4th, 441,000. 171,000 more fails on the 8th. Okay, XRT is cracking at the seams. And what we saw take place with shares outstanding, again, so awesome to have this data. What we see, maybe this has something to do with the fact that shares drop to zero sometimes. This just happened today for 6 hours overnight. Available shares to borrow of XRT were exactly zero. You could not borrow any shares of this security between 12:31 and 6:29 a.m. today, Eastern Daylight Time. Additionally, right, what's going on here with the shares outstanding, with them falling and then increasing and then falling in this period of just a few weeks, there needs to be this kind of rocking back and forth in order to juice this different liquidity. And what seems to be the case under these conditions is there is not a sufficient amount of liquidity to be able to be generated in XRT in order to control and adjust and transpose the price down. Very interesting. This is still hypothetical, right? I mean, I'm getting very excited because I think I'm starting to get a handle on what exactly Ryan Cohen is doing here with these convertible bond offerings and why this is genius. But what would this mean, right, for GameStop's price action? Why, in the past, has this corresponded to, say, in 3 out of 4 cases, a move to the upside, a pretty decent sized move to the upside? Well, it seems that, right, it's the creation order that immediately comes after. Is when you get down to 2.35 million, that's it. XRT's been maxed out in terms of its redemption. However far down the price was transposed as a result, right? Think about this. There's 7.5 million units of XRT, and the GameStop packed into those was used up in the course of our move from, let's say, 4-1. Let's see, where's our chart here, right? So let's go back here for a second. So from this move to here, right? So the 4th was, the 4th was down here. This candle is the 4th. Okay. So from here to the 10th is here. Okay. So just when we moved up beyond the 200-day simple moving average here, this move came on the heels of 7.5 million units of XRT being created. All right. Then we moved up to the 100-day. Okay. GameStop liquidity went up with it. Lending liquidity went up with it. And since then, since we moved up beyond this, right, it looks like that lending liquidity has been used to basically keep us pinned right around here. Okay. As of yesterday, XRT redemption capability was tapped out. It looks like that 2.35 million mark is where XRT liquidity taps out. So what happens now? It has to be refilled. There's no more use for it. It can't be emptied anymore. There isn't anything to empty out anymore. So if XRT is going to be used as a vehicle for controlling GameStop's price, it has to be refilled. So if creation orders come in now, what that should correspond to is something like what we just saw here. Okay, something like what we saw in this move up, something like what was seen back in February of 2022. So something like, yeah, about a week and a half move to the upside, something like that, starting with yesterday. That's the hypothesis there. That seems to be right now what these trends are suggesting, what this data is suggesting. Obviously, this is hypothetical. I'm not an expert in this. I'm certainly not telling anyone to go out and trade on the basis of this. But if indeed this is how this system is working, then this is essentially how Ryan Cohen may successfully be able to root out the shorts by bringing in new shorts who will use, okay, they'll use shorting, but they will short the stock in the open. They will not go out and right, because they're hedged. They're shorting the stock to hedge a position that is profitable for them. They are not shorting the stock in order to transpose the price to the downside so that they can stay alive. They're perfectly hedged. Whoever is arbitraging the bonds is hedged, and they're profitable. They're making profit off of the volatility. They're making profit off of gamma exposure. They do not need to do ETF shenanigans, which you're technically not supposed to do. They don't need to do this backroom stuff. So if successive convertible bond offerings, senior notes offerings, what have you, bring in new waves of buyers without creating new shares to circulate in the lending pool, without creating shares that can be used in order to satisfy fail to deliver requirements, then this continues to put a liquidity crunch onto legacy positions, with the result that GameStop's price falls out of their control and must continue to move higher. They will be at a reduced ability to transpose the price downward using their traditional liquidity engines. Very interesting, right? So if this is the case, what we should see is, what should follow here is a recreation, a number of creation orders in XRT should come down the pipe, and we should see GameStop's price, as XRT fills itself up, continue to move to the upside, leg up again, possibly this time into say the 30 range, right? If we look at our options, if we look at our technicals, that does seem to be our next sort of target, maybe as high as 32, something like that. I don't want to get too far ahead of myself. That's basically our next kind of historical resistance point, is around 32. But if, of course, as we've talked about in our options data, the 29.50 kind of 30 area seems the next logical step up in the short term. Very light options activity recently. We didn't see too much into this week. I would say that we did have some decent volume at the 30s heading into the end of this week. Into 5.9, we actually did see again, right? So somebody targeting that historical level. We saw a decent sized block, about 1,500. About 1,500. New calls at 32 come in, so at the ask. And then we saw a fair number also come in for next week at the ask, probably around 1,500, conservatively at least about 1,000. Right, we can see these big blocks here for 30. And then, this is a qualified contingent trade that came in. So this is going to be a hedge trade. It's a neutral trade. Max Pay move up to 26.50, certainly a good mark. Why do I continue to say this kind of 29.50 area, right? So we have very little OI at 29.50, not a lot of call GEX there, and then we have this pretty big call wall at 30. So if we were to move up through this very thick call GEX dominant area where we have a lot of sort of resistant market maker hedging here, especially at 28, then I would imagine into this area is where our maximal extension would be. If we see creation orders, big creation orders come in on XRT, that may be enough to knock us up sort of briefly above that, right? If this is liquidity creating, there are still 3.5 million shares out there. So these can be utilized to make sure that we don't go too far beyond some of these thresholds. Certainly a move beyond 30 at this point would take something pretty extraordinary, but hey, it could certainly happen. As far as broader market context too, this is another thing that's interesting, is surprisingly bullish reconfiguration here. If we're looking at our if we're looking at technicals, does look like maybe now that we passed over the 50-day moving average, we might be heading for the 50-week. Momentum is looking decent over on the daily. We're getting a bullish crossover here. We're starting to flatten out here over on the 20 and the 35-week PMO line. So good to see those kind of flatten out and curl up. Certainly above the 0 line is good to see in terms of stability and some potential return to the upside there. In our options data, we're looking, we have call wall move up to 570. So that's our next overhead target. And then if we look at our next gamma expiries, well, Nelly, a lot of dominant call gex there today. Big net call gex position, trader long, and a pretty decent one going into tomorrow too. So the end of this week is certainly looking a lot more stable than we otherwise might have expected. Traders kind of keep going like one more day, putting in some more calls to sort of pin us in these upper ranges. Call wall moving up is also a good sign. And the weakening of our put dominance at 516 is also a good sign. Doesn't mean we won't retrace to the downside. Still have Bank of Japan rate decision coming out. Should be coming out today at some point. I guess be happening overnight, something like that. I don't know exactly when it's going to come out. Later in the day, that could cause something of a retracement. But at least in the immediate term, traders are still betting long here. Next sort of checkpoint is around this 567 to 570 area. So very possible if we continue to see call flows come in, then we would move right up there before having another kind of question mark about moving to the downside, maybe taking some profits or attempting to get out of put positions into mid-May. So interesting to see that could open up an opportunity for the magnitude of an XRT creation related GameStop up move to really give that $30 mark a good test. So very interesting to take a look here. Exciting things playing out. Certainly excited to see if indeed we are really understanding what's going on here with respect to GameStop liquidity and what's going on with this convertible bond trade. If I'm understanding this correctly in terms of what's going on with Ryan Cohen's move here, but just wow, exciting stuff. This is a historic day. I mean, bookmark this video. I'm sure at some point in the future we're going to be coming back here. I'll be referencing this particular video and this particular analysis. So yeah, guys, good luck out there today. Good luck heading into tomorrow. I'm sure this is going to make for a great topic for tomorrow's live stream. So really looking forward to seeing you guys there, 4 p.m. Eastern Daylight Time. We'll see you there. And of course, we'll see you for tomorrow's breakdown tomorrow morning. So thanks very much. And we'll see you guys then.